GB cycle with an update on December the 29th. So my 4-week cycle here in black is bearish for the next coming week, early January, and I expect some kind of a pullback. It could be a ABC pullback into mid-January, making the low of this 10-week cycle being around 12 weeks this time. But there are some cycles suggesting it could be an extremely long 10-week cycle, making a low at the end of January. So we'll see about that. We're about to break this red trend line, and we should see some kind of reaction to the downside. Cycles. Well, I showed this in the previous video. We have the 34-week or the 17-week cycle, where we now are out of phase with the cycle. We see the market lows are a couple of weeks later than the cycle low, and we see this next stayed shifted the same amount, and the next one also shifted, so I expect this next one to be shifted as well, suggesting a low, well, that's February or perhaps end of January, around that time. We also have the 10-week cycle. This is the ideal 10-week cycle in purple, and here we are also about a little bit out of phase with the cycle. You know, we were following the cycle perfectly into early this year, then we were shifted out of phase. We have stayed out of phase, and then this fall we are trying to get back in phase with another very long cycle, but we are still not in phase with the cycle. So the ideal cycle low is the end of February, but you know, it could be mid-January as well. But I think over the next couple of months the market will try to get back in phase with this ideal theoretical cycle. Going to hourly data. So we see these 2-week oscillations, and now we are seeing a 2-week oscillation that's losing momentum. You know, all of these 2-week oscillations, they reach the top of this trend channel, maintaining momentum here. But now we have a 2-week cycle that has lost momentum, almost making it a double top. So we have followed my red scenario, and the coming week is generally bearish. So we should see some kind of a pullback, and the next 2-week cycle could reach the top of the range. It could be a higher high, it could be a lower low, and everything's possible. But mostly we should go sideways or down into mid-January. That's my main scenario. And when comparing to analogs in the Dow Jones, you know, very strong rallies. The average actually has a top 1 week into January, but we don't have to follow this average. You know, we are in this band where we actually broke above, and yeah, generally expecting a low mid-January, but it could also be late January. Yeah, shouldn't be much more upside here left. So we have wavelets for the S&P daily data. So I have two scenarios. We see this blue wavelet, we have made an A, B, C, and although this purple one looks like it's making a low, it could morph into a situation similar to here, where the purple wavelet gets distorted. So the one scenario that's a little bit bearish is that we are at this point, we have this waveform, and we should now expect, call it a cycle low coming up here with a correction in January. But I don't expect a very deep correction. But there's another possible scenario, a little bit more bullish one, suggesting this purple wavelet is about to turn up here. So although the blue one is going down, the other one is pulling up. So that will be this a bit longer waveform scenario, where we are around this point, and we get a little bit pullback in January, but then so quickly we pop up to all-time highs with this black scenario here. And we had a lot of correction in this bull market, and here a 3-month correction. So, you know, now we are back at all-time high. We could see a period with very little volatility, just grinding upwards, boring, not as steep as this, of course, but you know, all-time high and then just grinding upwards. That's very possible. So, you know, my general outlook here is we have some kind of major top around May, major low around June, and the bull market final top around December. But we will have volatility and some lows in between here, of course, but I think this will be the major points. So wrapping up with a bonus on the end. Here's the 3.5-year cycle for the S&P, the cycle in black, and I've been trying to find, you know, some clues what's behind this cycle. It's been working for 100 years, even maybe 200 years, and you can't have a cycle that's working that well without any reason behind it, something that causes this market cycle. And I've been looking at a lot of stuff. You know, I've been looking at temperature, El Nino, La Nina. They have similar cycles, but not identical. So they are not quite related. And there should be a driving force here caused by solar activity, but I haven't quite found any solar activity indexes that shows this cycle convincingly. I do have found something, but I'm not convinced. But I'm looking here at Earth. We have earthquakes here shown by number of earthquakes stronger than magnitude 6, and actually here we do see the earthquake cycle is correlating pretty well with the theoretical 3.5-year cycle, and it's also correlating pretty well with the market. Not always, but yeah, often, like 2009, every cycle is going down. The earthquake cycle or earthquake activity has a low in 2010, and so had the market, but that was not the cycle low. It was in 2012. Actually, here the stock market made a running correction, A, B, C, where the final low C was a higher low. So it was more like a bullish triangle, and then we popped up. But there are periods with not that well correlation, like here. Earthquakes just going up and down sideways, and actually has a final low much later than the cycle low, and the market already rallied. But here we had the late COVID crash low. That was a bit late compared to the cycle low, but earthquakes also had a low around that point. And going back here, the stock market high in 1980 was almost inverted compared to the cycle, but actually the earthquakes shows a very similar pattern. Yeah, it has some here that looks, you know, this bounce here, it's similar, and then we grind up, and then we go down. You know, here A, and then up B, and down C. It's funny how similar it is. But then you get to this point, earthquakes dropping, markets not, or here the 1990s, earthquakes going down, market up. So yeah, but I think there's something here influencing both the stock market and earthquakes. I don't know what it is, and we don't have to know what it is, because we can just we know the cycle. That's all we need. But as a scientist, I would like to know the real cause behind it. So if you have any clues, please give me a notice, and let's see if we can ever sometime figure it out. Who knows? So yeah, see you in the next video. Bye bye.